Well, good afternoon, everybody. My name is Steve Hill with AIQ Systems, and it's 2 p.m. here in Pacific, 5 p.m. on the East Coast. Going to get this session going today. We're going to do about 45 minutes on point and figure charting. We're going to cover a little bit of a PowerPoint short one just to give you a bit of an outline, maybe a refresher for many of you on point and figure charting and the components, how it's done, what's in it. And then we'll move into the reports. We have, of course, a point and figure report in most areas within stock group and sector, weekly, daily, and the AIQ reports. And then we'll also have a look at some of the output from those reports and some methods for confirming breakouts, which is one of the key things you can do great with point and figure charting. So just left S&P 500 zoomed point and figure chart on the screen there. We'll go back and look at that in a moment, but I'm just going to start with a quick refresher for us on the point and figure itself. So PowerPoint, this is, nothing, no rocket science here. Mostly point and figure charting for us, box sizes, reversal, X and O columns. So every time you have a column of X's, that's price increasing. Columns of O's is price decreasing. That's the basic way of thinking about it. A new X gets added when prices move up to the level of one of the boxes. So the box sizes are based upon how much it moves depending on the price of the stock. So for example, a $20 stock, the box size is going to be smaller than the box size for, say, a $100 stock. All of the settings for the point and figure charts in AIQ, both used in reports and in charts, are configurable, but I would suggest keeping them alone because the settings are pretty much standard across many platforms. So every time price increases, for example, a $20 stock, say, increases by $1, $1.20, you're going to get a new X added to the upside if it's moving up. If it happens to move several dollars up, then you may get more than one X moving in that column of X's. The key thing is it's non-time dependent. So it just keeps moving up the X's. If the price keeps moving up, it just stays in the X column. It doesn't move anywhere from there. What happens when prices start to change in direction, you don't immediately get a column of O's. O's start when prices are going down. The O column starts once you get a reversal. And that reversal amount, which is usually three boxes, is the key leaping off point to start a new column, but with O's. So let's say we've been moving up, we've got 6 or 7 X's, we have several days of down price movement. There won't be anything happening on the actual chart itself, the point and figure, until the reversal point is met, and then the boxes will appear. And so that's how it progresses. New columns are only created when there's a reversal in price direction. So that's the key components right there from point and figure. So of course, X's can keep going and prices are going up. O's can keep going and prices going down. It doesn't matter. So there's no horizontal time axis for that. So when you look at this chart, this is 2 years worth of the S&P 500. You can see how compressed it is, and the date down here. This is not really relevant. It's useful for us when we're trying to take the point and figure as a price chart, comparing it to a price chart, for example. But there's no time dependence here. I love when you see these columns of X's here. Price has just been going up during this whole bullish phase in 2024 on the S&P 500. So that's what you see when the price chart does that. There's no horizontal axis for time, only the price movements. And again, we go from X to O's, and X to O's is the same. A new column starts when it reverses by that set amount. So the settings we'll look at in a little while as well, so you can see how that works. So what are the advantages? Well, filters out noise. So closing price is all that matters in the calculation of the X and O's. When you get a lot of volatility and moving around, it can filter out all of that and just give you the general sort of overall view of direction changes. The other thing that we'll look at is support and resistance. There's a method of doing that, actually seeing that in the point and figure chart. And, the longer term trends also appear in there quite well, especially the support and resistance areas. And it simplifies pattern recognition. This is definitely a true thing. You don't have to look at a price chart to try and identify, is this a double top, triple top? It's just done for you. And don't confuse double tops, triple tops in the traditional chart pattern sense with the way point and figure does it. It's similar, but not quite the same. And what it's looking for, because it filters out a lot of noise, it might find the pattern that we would not normally see just by our visual recognition. And it helps with breakout trading. That's the key thing we're going to look at, because that's what our analysis years back now showed that was really crucial in point and figure, was that breakout, a triple top breakout. You don't see double tops in charts, but within reports themselves, we focus on triple breakouts. So there we are, double top breakout, bullish signal, two columns of X's at the same height. So you can see that looks like a double top. But of course, this is a filtered view. And so, this is far more, there's far more nuanced is the way I would look at it. You might have a double top in price action. You would look at the price chart and say, that's a double top. It might not be the same pattern that you would see within point and figure, simply because of the way the calculation is done in moving a new box based upon the box size and the reversals. Same on a double bottom or triples. The triples are, stronger versions of the above. And that's why that was the key launching point, really, for point and figure in the reporting section. The other thing I'm going to look at here, this support and resistance, the 45-degree slope is not set in stone, but you can actually see it in a point and figure chart. A 45-degree slope shows support and resistance. You can then go back to the price chart and see where that is in action over a period of time you might not have looked at when you're just looking at a regular price chart. And it's just, it's a simple. So when you see the point and figure chart bullish, it's bottom left to top right, so it's ascending. So what it is, if you think about it, the columns of X's are getting higher and higher, whereas the columns of O's could be whatever they're doing, they're certainly not getting lower and lower, because the trend tends to be up. And the same on the bearish side. So if you had a columns of O's are getting lower and lower, then that's a bearish, and that's a useful support and resistance methodology using point and figure. So that's just a quick overview. Rather than go into too much detail on the mechanics of that, let's just go straight to charts to start with. And I'm going to get rid of this. So look at this. Well, let me just back up a minute. In here, I actually have the only indicator I have actually showing is put that on the screen here. This is point and figure. I just emptied out my control panel. It's in your control panel in there. It doesn't have a barometer reading because it doesn't have, it doesn't work in the way the regular indicators do. There's no way of it to be able to be interpreted with a bullish or bearish in that type of what I call linear chart, because of the lack of date. No time is involved in the creation of this pattern itself. So this is 2 years worth of the S&P 500. How do I get this up like this? It's a Z key, of course, the old zoom. I'm just going to zoom it back down and switch this to a high-low chart. So this is 2 years worth, and I've only got like, what, a year and a half in here. So when I do this, and I get back to here a little bit further. No, that's too far. Here we go. So yeah, this is pretty much 2 years worth of the S&P 500. That data is compressed into this down here. That's how this whole point and figure works. What can we see in this? And let's just look at a couple of things in here before dive into some stocks, we'll look at this because we can actually see in action the double tops and double bottoms that are identified by point and figure and the breakouts. So let's look at first this one here. This one's a good one to look at because the breakout, and you have to, this is the way it works in point and figure. You need two columns of X's. That's a double top, the same height, right? The same height. This is not a double top, it's this. A triple top is three of these X's, 1, 2, 3. The breakout that we look for is when you have this pop above here. Now you might think, oh, well, I mean, but the chart doesn't go anywhere, but that's not how point and figure works. So what's happening here is that the breakout has occurred right here, right at the beginning of 2025. That's when the breakout is. Even though this chart doesn't have a great deal of relevance for us on time, that is when this occurred. So if I do this, I go back out of my zoom here, and I look at the beginning of 2025 here, you can see where this topping area was coming into place here, where you have this, the X's are actually in place. It's topping out here. In a case like this, this was a failure. I like looking at this one because even though you had the breakout, price action did not do anything from there. In fact, it reversed to the opposite direction. Would seem kind of counterintuitive. It's like triple top, things are going to come back down. Point and figure triple top breakout is a continuation. So this is a failure of the pattern itself, but also within this zoomed view of the point and figure in here, we have another one, which is, let's find where the other one is. I think it's in here. That was that one in that direction. No, maybe we don't have another one here. Nope. There it is. I found it there. I knew it because I checked this out earlier. So here's 1, 2, that's the double bottom, and here's 3. And this, once it reached this extra box here, it would have triggered then the breakdown. This is the breakdown occurring here. So this one happened in the sort of September of 2023. So when we go back and look at the main chart itself, when you go back to September of 2023, the trigger set off in this point here. This is where it set off the actual signal before the price action moved down a modest amount, but it was definitely a fairly good signal. Now, again, remember, this is boxes where, this is not classic triple bottom, triple tops. Where do you see a triple bottom, triple anything here? It's because of the way the point and figure works. It gives us a signal where we may not be able to see it in a regular price chart. So let's have a look at the reports before we look at some stocks themselves and using some confirmation with volume. The reports themselves, I'm sure many of you know that reports have the stock, the point and figure at the bottom of the stock reports themselves. I generated this report last night. We're going to look in here. This is the easiest area where I can see the settings for the reports as well. The settings for the point and figure are exactly the same as the settings for the charts, except for one area in the reports themselves, which I'll show you right now. So here it is, upside and downside, upside X, 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 3 X's and a breakout, downside, 3 O's and a breakout to the downside. The settings that are used in here, when I go into the properties, the box sizes are based upon price levels, as I was mentioning. The higher the price levels are, the more boxes, the more it takes to actually move as far as volume dollar changes to get a new X or O in place. The syntax we used in here, it's 1/8 of a point. And so the box size for stocks between $0 and $5, 2 times 1/8, basically a quarter of a point move gets me a new box. If I don't get that, I don't get a new box. But when you get up to higher stocks like here, let's do the $20 to $100, 8 times 1/8, so you have to get a $1 move before you get a new box. So you can see how the calculation works. I mean, as prices move up, it takes more movement in price for it to create a new X or Y, which is Makes perfect sense. You wouldn't want, 100 to 200 box size to get a new box every time the stock moved up half a point. So that's the key areas as far as settings are concerned, both in charts and reports. Reversal, 3 days. So for this size box where it was a quarter of a point, it was going to take 3 quarter of points to get a change or a new column. In this case, that will be 3/4 of a point. If we get to the upper level here, it's going to take quite a bit more in the way of dollar values for it to change than start a new column. Other thing that's in here, by the way, is months. It's 24. You can set it as high as you like, and you can do that in charts as well. It can go back and look further in data. I just happen to have it set at the default for 24 months. So that's why the point and figure only covers 24 months in the price action. Different thing, this is a thing that's not within the charts, which is the search number, which is the number of days that this checks back to see when that breakout occurred. So in this chart here, and this report here, some of these stocks could have broken out a couple of days ago. So you can change that to 1 and you'll get less stocks in here. So you'll be immediately looking at breakouts that are happening right there and then. So I've already prepared these lists. I've taken each of these, the upside, and built a report list in charts to save us a little bit of time in here. So let's have a look at the first area. So I created, oh, that's actually the other one. Give me a second here. I want this one, I think. There, so upside and downside. Upside, X is breaking out to the upside, the breakout. The next box is above those 3 that are at the same level. And the downside, which we'll look at secondly, will be obviously 3 O's in a row and the breakout to the downside on the day or within that 5-day period we have for the search. So here's the list of stocks right here, exactly in the order that came out in the report itself. Let's have a quick look here at the first one. So this is PSX, Phillips, and I'm just going to zoom into the report. It's the zoom in here to see exactly why it's in the report. And you can see this is the setup we're looking for. There's the first and the second top. Remember, this is point and figure top. Here's the third one. Doesn't classify until this breaks out. And that's the breakout point right there. If I do this, if I go back in time here a little bit and just move this back 1, 2, 3 days, then hit my date key. So I've changed my date back to the 17th. Watch what happens to the point and figure chart. So you can see the change that happened on that chart itself, right? So when I start progressing this forward, look what happened. In that period of time, in just those few days, we had some very high volatility that created a row of O's down, and then the X is up. So it was actually on 422 that we had the triple top in place on the point and figure itself. And there 423 is when the breakout occurred. So how does that translate into a price chart for us? So because remember, we still have to look at the price chart for our ability to make a trade. So this works on closing price only, remember? So the closest you could see this as being, double top in price action is kind of in this area here. Let me get rid of this one here. So the breakout is in this sort of zone here. So this is the area that the point and figure is identifying as the topping area, and this is the breakout point. And so again, you could then use this as an initial stop, and then price moving on from there. With point and figure, I look for volume. So volume is not as significant. It's not like a pennant breakout or that type of thing where you want a big surge in volume. You just want a little bit of commitment or just regular volume in place. So I have the volume indicator here as well. I pop that down there. And you can see here, there was a little progression in volume. That's not a bad thing to see, a little bit of volume increase here. So that's the thing you're looking for with a point and figure as a trigger for a trade. It's not, it's unlike any other methodology for finding positions to go long and go short. I actually have highlighted in this particular stop, I think I'll put this trend line up here because there was something over here we were looking at. And let me check that a moment. Or maybe that's from a previous one. Nope. Nope. Okay. Ignore that trend line. That's one I put in from some previous looking around. Again, it's not the only thing we're interested in here is this list, which was created from those breakouts. So let's go look at another one in here. So this one here is Bunge Limited. So this one's a little more interesting, quite a big volatile breakout on this one. So here we are, we're on the 23rd. Look how many extra boxes have been created above the breakout level. So again, just to illustrate this in action, if I go back 3 days, I think it is, or is it? Yes, 3 days on this one. There's only one box. So if I go back another day, I believe we're on the day. So here we are, 416. Nothing happened. It wouldn't be on the report. 417, it would appear on the report as a breakout. So April the 17th. There's the breakout point right here. So that's the day you would first see it on the report. And then it appears on 418, well, not 18 because we were closed, but it would appear on Mondays and Tuesdays and Wednesdays report. So it's always, so, you know, you kind of got a moving view of stocks that have had the breakout in that report itself. Back here into the chart, closest you could get is this. You know, what's happening here is this is the breakout. But of course, the breakout really happened back here. And again, you cannot use classic interpretation to think it's like breaking out from that because the breakout was on 417. It's close to it. It's close to that. And the same sort of thing here. You look for the volume. If the volume looks good, volume on this one, and you know, the pop really happened on the 23rd, I think. No, actually, it's on the, yeah. So on the 17th, there was a little movement up in the volume. You can see right there. So excellent confirmation of that breakout as well. So a very different view how this works. You can also use something like MACD crossover as another layer of confirmation, because this always is happening where there's a small movement or a moderate movement upside already coming from that third area. So top, it's pulled back, and we're here. So this price action here ties in nicely to a MACD crossover. Let's see if we can add that in there. Yeah, I found that taking out the indicators for these presentations helps me too. No, I don't have too many indicators showing on the screen then. Let's get rid of MACD oscillator. So here we go. So if I add one more layer in here, the great thing is the crossover has happened back here, and it's a good thing to see. So 417 is the key off date. Let's put the cursor on there. So you can see here with the crossover, the volume is okay. We saw that a moment ago. The crossover on MACD has happened, not surprising. And we've got the breakout, and that sort of area back where the breakout occurred, that 417 is kind of the support area. So a stop just below there would be good if you took on this trade. It's interesting in how the patterns work out. Sometimes you can see them quite clearly, but sometimes you can't. This one was a little more obvious. So let me look at another stock here, and we'll also, no, actually, what I want to show you, actually, just jump down to Coca-Cola. So you notice how compressed the chart is on some of these point-in figures. When you look at something like Coke, look how small it is. See this here on Coca-Cola? Very, very small. The reason for that is when a chart, especially a company that's you know, a non-cyclical business like Coca-Cola that has, you know, drinks pretty much drunk all year round, and you know, I say, oh, well, it's drunk more in the summer, yeah, but it's always summer somewhere. It's a, you know, it's a very stable, high dividend paying stock, and price action doesn't move so much. So doesn't add many new columns because it doesn't move enough to add new columns or change direction very often. So there's 2 years worth of history right here in that price chart and point and figure chart. In this case, the first time you might have seen something, it was close to breaking out. When we go back in time, if I move the chart back a little bit, we're looking at 417. You can see the breakout is already on there. If I change my date to 415, so it hasn't happened yet. As you progress forward, 416, 417 still hasn't happened. 421, 422. So this happened the day before the report. It did the breakout. So a pretty good, topping area here, even though it's not date centric. You can look around about February for where this pattern began. So how does that look? What are we looking at here in Coca-Cola? Because we know it's got a very small point and figure chart, we know it's in something of a price range, right? It's not moving very much. It doesn't change direction. It's not volatile. So in this case, what we're seeing here is really this whole area here translated into that triple top pattern on the point and figure, with the breakout happening on the 422. And of course, it's still on the report for 423. And it's still sort of holding in that area at the moment. Volume, again, not a lot of commitment on the volume. It's pretty flat, but at least it's not declining. It's not like traders have all run away. And the crossover, not surprising, on MACD is looking good. But something like this, when I look at these particular point and figures, especially on ones like Coke, anything that's in a really range, and it is a range. I'm less interested in this stock. I mean, it's moved between. Let's see. I mean, this year it's moved between 61 and 70, 72. Not a huge amount of movement in there. I mean, some movement, but still, there are probably better candidates out there to go look at. Let's check another one in here. This one is Iron Mountain. Much more patterns, much bigger on this one, of course. And you can see here we've got the 1, 2, 3 X's in place. And here's the breakout. And again, I do this every time. It's like, okay, let me scroll back and just make sure I know when this breakout happened, so I can get a key point of where my support is likely to be. Change my date to 417. That wasn't the day of the breakout. And it did the same thing as the other stock that had a really obviously very volatile price action at the moment. So whole new column of those, and then switch back right around. I mean, that's exactly what we're seeing in the market during that period. And there's the breakout on 423 in this case. So, very volatile, right? Sort of that price level. What are we looking at on a price chart? We're looking at this. Same thing here. It's only in this zone here where we're seeing the breakout. It's not a great trend line, Steve. Let's get rid of that. We're only because 423 is the breakout. So because of the way price charts are in here, it's hard to see if I don't, let me do this a moment. See, I can zoom on the price chart with the Z key without having to take away my indicators. Makes life nice and easy. And so we're seeing the breakout is here. So the topping pattern is, again, it's not like a topping pattern within our classic trained, triple top, double top bottom line that we all have in classic chart patterns. But it is a classic breakout for point and figure. And in this case, price action, 423, your stopping level here is probably right below this price bar at this level here in the 80 zone. What is that zone there? 83 or so. What does it mean for volume? Volume on this one is not great. Skipping that. So I'd probably, volume's pretty much dying on this. So that's a non-confirmation, even though MACD looks pretty good. It's a good crossover. We're always going to see, almost always see the crossover is there on the MACD. Not always, and that's not, depends on the number of X's, right, in this column here. So if this column here has got a decent number of X's, but you can have a triple top with only like 2 or 3 X's in a compressed price chart, and then the MACD generally doesn't confirm. So that one, because of volume, will skip that particular stock. Caterpillar's another one in here. This one's actually good because I want to illustrate the other element in here, which is the support and resistance with slope, which you can see on a longer term plan. So here, this is a nice, Caterpillar, which is a pretty, stable company, has been pretty volatile as well. This is a great looking point and figure chart. It's had several different breakouts over different periods. I mean, look at this one here, 0, 0, 0, breakout down. There's another one here, O's, 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 breakout down. So it's had a couple of those in there. Hasn't had X's to the upside. Someone asked me, by the way, I did a presentation to our UK folk earlier today, so this is why I've got most of this prepared. XXX, they have to be at the same level. That's the key thing we're looking for. Has to be at the same level to be a point and figure triple breakout with the one that's like. So this is good. This is a great looking chart. If we look at this breakout on the Caterpillar, the actual date it happened, I'll just scroll it back a couple of days so we can see it in action. And again, I'm expecting it's a similar thing. It went down and there was not even an X column formed yet, and then bang, 900 point day, whatever on the market, enough to push to create 1, 2, 3, 4. What is that? Is that 1, 2, 3, 4, 5 X's just like that, right? And it's a breakout. So that's how quickly it can change when things are volatile. But generally, it doesn't move along quite so fast. Indicators again, let me bring yourself back down in here. The volume itself. Now, volume's been kind of declining again on Caterpillar. That was interesting how that's working on those stocks. So the volume, this is very, very high volume during an incredibly volatile period of the first part of April there. Again, the volume's not bad, but it has declined. So it might be best to look at a different stock. MACD on this one is, it's only just crossed over. So you can see here, this one has a weaker characteristic for confirmation. We have other stocks we can look at, so we can move on. Oh, I'm sorry. I actually wanted to show you something else on here. The support and resistance, which can be over a very long period of time. If you've got a 45-degree angle, which you can see in the price action itself, I'm sorry, in the point of figure. So, for example, look at this here. It's forming it right here. This is a really good 45 degree. It can't be 100 exactly 45, but it's very close, isn't it? It can actually be exactly 45 if you have the right number of X's and O's in the column. This is forming a nice area here. How this will work for us, this is kind of a support area going forward. So when you look at this in the price chart again, this is this. So this then becomes support as this breakout continues to the upside on Caterpillar, assuming it does, right? I'm sorry, you can ignore most of these other lines up here. That's me just getting a little click happy, I think. So that's a nice looking 45-degree. This is the support. If we have it going this way, 45 degrees, it's a bit of a resistance. This one's not as well defined. This is much better defined as far as a support slope is concerned. Bottom left to top right, bullish support. Let me just jump down to one I know in here, which was yeah, so here's another one. So this is Johnson, JCI, I think that is. There's the breakout again. And let's look at the price chart itself. We'll go straight into the chart. And, I've drawn the area. It doesn't look anything like a triple top, right? But this is not about that. It's about point and figure charting. There's a far more measured breakout. So it actually broke out on, back down to here. Zoom on this one. I'll move the date back a couple of days again. So this, again, similar because of the way the market's been moving. Look at that. 2 O's are added. So it seems like it's about heading down to the downside, and then bang. Look at that. It added 6 X's. Bang, just like that. Broke out. That's the point and figure in action right there. Volume on this one looks better. That's pretty good on the volume. Better than it was on the Caterpillar. And the MACD, this one's crossed over. Still, it's not great on the MACD. We might move on to another stock. Look at one more here on the bullish side of things. The great thing is that we've got the bearish side too. That wasn't the one I was going to look at. This was the one I looked at earlier. Thermoelectron. Look at the MACD on this. It's barely crossed over on the 23rd. And if I zoom out of this one and look at the pointed figure itself, this one had a massive, massive move. Look at that. When I change this back 3 days, here we are on this day, which is 417. We haven't had the breakout yet. We're still moving down. 421, that was Monday. And then on 422, we get a pretty good move up. And then just like that on 423, whatever the reason, may well have been some news. Not sure whether it was earnings news. Doesn't really matter. Here we have the breakout. The breakout has occurred. And so this is a stock for us to go look at. So let me zoom back out of that. Quick look at the price chart. We know it's broken out. This is a pretty powerful day right here on this breakout. It really is. Your support level, if you did go long on this, would be in this sort of level. You might be down here because it's pretty volatile at that last couple of days. Other indicators on this, the volume itself is massive. Very, very good to see that sort of volume. The crossover, yeah, it's a little late, but that's not surprising. This thing was going nowhere and going down here, so MACD is reflecting that. Not a bad looking stock, that one. Worth keeping an eye on. It could go stellar. Again, it's expensive as a stock as well. So that was that's the upsides. I remember this run every day. If you just want to see the ones that break out today, then that's fine. You can change that setting, the look back period. It's in this reporting area. I'm going to change the setting in here. Search box to 5. Just go back 5. So in the report I generated earlier, actually I have another list in here. Go find my other point and figure one. There it is. This is point and figure 423D for down. So, and let me get rid of this one. So this is interesting. When I brought this up, remember I was saying about how limited a price chart, how limited a range on stock can lead to a point and figure that's very compressed. And again, these stocks are hard to trade, right? I mean, look at this. This is Expedia. Not Expedia, it's Expeditors International out of Washington. Other than this area down here, it's kind of in a sort of trapped in this range. And that again is reflected in this very, very linear pattern on the point and figure itself. However, it has had a breakdown, obviously. So there is this 1, 2, 3 O's across here, and there's the breakdown. Again, we can move the date back and find out exactly when that occurred. And let's go back 1, 2 more. This should get me in front of it. Yeah, let's go back again. Yeah, so that one's already down. 1, 2, 3. Yeah, so it's actually occurred quite a few days back. So not sure why that's actually showing already on there back on 410. The breakdown has already occurred. Again, we're looking at the price chart itself. Very hard to see on the chart, what this is related to as far as price action is concerned. It's happened over a substantial period of time. In a case like this, again, we're looking for a breakout to the downside. So your signal might have come in on, back here actually on this day. Let me go back to D key. I'm going to go back a little further. Right, I'm going to progress this forward and figure out, there it is. So the first breakout actually was on 4-4. So that would have been way back here, and it really shouldn't be appearing in that report. EXPD, Let me just double check I'm on my right page here. No, it's definitely in there. There it is. Point and figure breakout down. Yeah, so I need to check into that. Let's look at another one here. TAP. So I zoom in on this one and we'll take it out to. So this is, that's what we want. 421. There's the breakout to the downside on TAP, which was a great ticker symbol for a beer company, TAP. It's very good. Very good point and figure chart overall. This one has, exhibits great, another, bullish move over here back in the early part of 24. You can see also another breakdown here back in November of 24. And we've got, of course, this one here where we've got another breakdown happening right here. And that translates into a price chart, this breakdown here. The great thing with this particular chart, it's a little easier to see even stuff going on with the price action as far as a sort of very messy triple bottoming breakdown. And it's the breakdown we care about. Support areas, again, somewhere above this particular line I've drawn. But look what the other thing is in here, the support and resistance. So on the upside, remember earlier we saw bottom left, top right. That's our 45-degree approximate support angle for a bearish, bullish move. For this bearish move, here's the angle here. I put it on the chart. Look what that's, I got that from here. You've got the beginning of the 45 degrees starting here. So that translates into resistance to the upside. So if this progresses down and this line keeps going, we start getting some bounce back, it's probably going to have a little bit of resistance going through that line, which is what we want if we're going short on the stock. Let me add in the volume and MACD for us to look at. First one is volume. Little spike up in volume, looks pretty good. MACD already crossed down, definitely going down. So it's a good looking stock for a triple bottom down move on using point and figure itself. Let's have a look at another one in here. By the way, there are a couple of other strategies that I've been looking at, which I'll get into another time, using point and figure. That again, it's something we don't have programmed into the system, but we might be able to get some insight into a session for you. So here's Pfizer. This one, I think probably most of us know this price chart on Pfizer here is interesting because when you get to the price chart on this, when you move it over here, you don't see much is happening, right? This doesn't look like there's anything happening in this price chart at all, but there is things going on. It's the price, the way the closing price is moving that gives us this point and figure chart with this big breakdown. So what's happened here, again, is to do with the price level, the amount of move within the price chart itself between the $20 and the $30. Remember, at that low level, it doesn't take as much to build a box to the downside. So really what you're seeing here, and that's why this works so well in point and figure, we can see there's a move happening, even though it doesn't seem so much in this chart. Watch what happens if I slide, part of it is because we've got a whole chart on the screen here. But if we slide this over real quickly, there's just been a bit of recent price action that's moved between 20 and 23 for a stock that trades between 20 and 29, right? So 1/3 of the range has been played around in this whole period here. That gives us all of these extra O's forming. So again, on this, the price breakdown support level is probably around, let's see when this actually fired. And change the date to there. And I think it probably fired earlier than that, actually. Yeah, I need to check that out. It's not showing what I expected on there. So the actual breakdown was even earlier again. It looks like it's got a setting in here I need to check on the breakout to the downside, because the breakout's happening earlier than we should have seen. Again, this is let me see what I have in here. Search box is still 5, so that could be my fault. I think I may have regenerated these reports with different settings on them. But the concept is that the breakout to the downside, as long as volume itself is looking reasonable. Let's get this back on the zoom here. This one has definitely had a triple bottom breakout to the downside. Volume looks okay, but the breakout was really back here. It was really back here. So I apologize for that. I've actually put the wrong settings in here. I was doing a longer search back period. So let me go back and I actually don't have time to generate that back right now. The slope was the other thing we were looking at. And I think there are a couple of other charts in here. Let me just see on point and figure where we had the slope showing. And it wasn't that one. I'm going to zoom this. This is, by the way, if you like scrolling through point and figure charts, I just zoom up on the indicator itself, and then I just scroll through the charts like this. You see how easy it is to do that. EOG resource, that's a big looking point and figure chart. It gets bigger and bigger because there's less change in the price action. So I think it was actually on tap. We had that sloping area there, and we had one up here. So this was the other area where we had this. See, this is a nice 45-degree angle. It doesn't have to be perfect. Back in July of 2023, which translates into this on the price chart. Yeah, let's go back to July 2023. So here's July 2023. So that is what is causing that 45-degree slope. That becomes, if you happen to be short, this becomes the resistance. Once it breaks through that, you get out of the position. That's the way this sloping area is working here. Isn't it interesting how that works? I mean, it looks far more orderly, is the word, than it does just on the price chart itself. So you know where it starts here. It actually ends around about, actually it ends early December. So you could say that this slope could be from here through to here even. You could even take this whole slope here, this whole area here. Stop being click happy again. This is a better looking slope. So looking at the timeliness, so from here down to here, which is early December, so the whole slope period to here is kind of this. You might have just stayed in if you had the slope running like this. You might have just had the bounce off of that resistance, bounce off of it here, bounce almost off of it here, then it broke out from there. So point and figure showing that resistance level very nicely on that price chart. So just quick recap. That's point and figure using volume and MACD as a confirmation. You get enough stocks so you can make a choice on that. Apologies again, I did mess up the downside. I have been playing with the report settings on that. So the upside is, I've very rarely used the downside. So, but the concept's the same. It is definitely the same. And look for those support and resistance areas for, it gives us a great guide. I mean, with this particular, Molson's, when it had the slope here in place, there was no signal at all for, for it to go down at that particular point with a triple bottom at all. So, but it just gives you an idea when you're looking at a point and figure chart, you can actually see, where these types of slope come into play. And there's definitely from bottom left to bottom top right, you begin to get it forming here as well. And that works well when you look at the price chart, this one was in May 2024 is where, somewhere down here, is it May? Yeah, late May, around about here, June, July. So down here is actually, it's from here. This is where the 45-degree angle is beginning within the point and figure. It makes sense though, doesn't it? Because as price action starts moving up, the X's will be higher and higher because it's keyed off of the price bar on the right-hand side there. So point and figure reports is the easiest way into it. As I say, change the settings maybe down to 1 day if you just want to see the results that are happening right on the day you generate the report. And by the way, this is on the S&P 500 only. I stick with some of them, with low cap stocks. It's a little messy sometimes. Anything over like a $2 or $3 stock, the point and figure can be a little harder to interpret. Any questions, pop them in the box. Thanks for everybody who's come in today. We've got the session recorded because I know a lot of folks can't make these sessions. And we'll get the link out to you as soon as possible. Questions, pop them in there. We'll drop them to support@aiqsystems.com and we'll answer them as best we can. All right, folks, signing off. I'll see you next time. Have a great day, evening, wherever you are.